Good morning, ladies and gentlemen. Welcome you together with Michael Gartner, our CTO, to our Q3 results.
Good morning, everyone.
Conference, where we'll be discussing the results for the third quarter and the first 9 months, as well as our business outlook. So I'll quickly go through the key points and key facts about our group, the business highlights of in the third quarter, and the financial results, and we'll be discussing the outlook. So just very, very briefly, we have been in business since 2008. We are a Dutch holding headquartered in Amsterdam with operations in more than 10 countries. We currently employ around 370 staff across our various offices. We're publicly listed on the main markets of the Warsaw and Prague stock exchanges, as well as on the Frankfurt Stock Exchange, where shares are traded in the Xetra system. We are currently covered by 5 research houses, and we have an issuer rating in relation to our ESG with a very good result. In our main business line, which is energy, we're currently developing 1.2 gigawatts of PV projects. We have commissioned over 150 megawatts of PV assets, of which the vast majority, namely 123.4 megawatts, are in our ownership. So they're part of our proprietary portfolio, which generates renewable energy. And we have another 20.1 megawatts in Romania under construction, due to be commissioned in early 2024. Last year, we produced over 121 gigawatt hours of solar energy. This number is set to grow this year in a very important part of our business, which is operations and maintenance of PV assets. We currently stand at nearly 550 megawatts, which includes our own portfolio, but also over 400 megawatts of externally owned capacity. And the integration of Lerta at the beginning of this year has added several business lines, which we'll be discussing a little bit later. But most notably and most importantly, we are now the third largest provider of demand-side response services to the Polish grid operator, where for next year we have contracted 389 megawatts of flexibility, which is nearly triple the capacity we are providing this year. Again, more on that later. And we will also talk about our most important activity in the Photon water business line, which is the application of our patent-pending nanoremediation technology on PFAS, to fight PFAS chemicals contamination. So this is our footprint spread across 5 countries in the CE region and Australia, with offices in all these 6 countries. The project development at the moment pipeline stands at more than 1.2 gigawatt peak, spread across Hungary, Poland, Romania, and Australia. Our portfolio of generating assets is spread around across the Czech Republic and Slovakia, with a little bit over 25 megawatt peak. These are power plants that were built between 2009 and 2011, and mostly run on feed-in tariffs. We have also added nearly 52 megawatts in Hungary, and this year we have commissioned 31.5 megawatt peak in the Romanian market, and we also have 3 operating assets in Australia with nearly 15 megawatts. In our O&M business, we have seen very dynamic growth this year, and we see that to continue until the end of this year and well into 2024. In our new energy division, we have energy trading licenses in 6 countries. So the 5 where we have offices plus Serbia. And in our virtual power plant, we have currently 290 megawatts of assets, of generating assets aggregated, and a significant part of that is the is the DSR capacity that we are operating in Poland this year. And as mentioned before, we have contracted 389 megawatts for next year, and in the main auction for 2027, we have secured already 157 megawatts of DSR capacity. So in Q3, we have seen a significant increase in energy trading volumes or energy generation volumes compared to the same quarter last year, to nearly 50 gigawatt hours, which is an increase by 1/3. Year to date, we have grown to nearly 115 gigawatt hours, which is a year-on-year increase of 11.4. We are projecting higher growth year to date, but the delay in commissioning of our Romanian assets has led to lower growth than originally anticipated. In Q3 alone, we've added 10.1 megawatts, and we have already completed the construction of 5 more power plants in Romania, taking the total to 13. These 5 power plants have an installed capacity of 20.1 megawatt peak, and these power plants are set to be commissioned at the beginning of next year. And what is definitely good news of the year is that including those 5 power plants to be commissioned early next year, over a 12-month stretch, that will mean that we'll have by then added in a 1-year period nearly 52 megawatts. So which is a very similar number to what we've built in Hungary, but what took us in Hungary is 3.5 years. We will have accomplished here, including preparations, in 18 months. Another important piece of news is that we have entered into an advanced stage of discussion with the European Bank for Reconstruction and Development regarding a financing facility of up to 50 million euros to support our continued construction and commissioning of power plants in Romania, as well as the further growth of our business in Poland, and in particular in the new energy segment. An important driver of our revenues this year has been a very positive dynamic in the EPC business in Australia. We're focusing on commercial industrial customers. So these are behind the meter installations, which means that the electricity is primarily consumed on site. Has contributed over 5 million euros of revenues this year, with more to come in Q4, and a very healthy pipeline of projects for 2024. And here I would also like to add that this is also a focus of ours in the CE region, and next year we expect significant dynamics in terms of revenues and contribution margins. In relation to our project development efforts, we also had a couple of important highlights. One of that is that our largest project that we are developing in Romania, which has a grid capacity of 45 megawatts, and at the moment a design capacity of 54 megawatt peak, has received the construction permit, both for the power plant as well as the substation that will need to be built for grid connection. With some outstanding development steps pending, we expect the final ready-to-build stage to be achieved by the end of Q1. We have also initiated, as mentioned in our last call, discussions with potential buyers for our Polish PV projects, where we have obtained grid connection conditions. This is about 35 megawatts, and these negotiations are advancing well. So we have multiple interested parties for either the entire pipeline or parts thereof. One important step in our Polish development efforts is that we have obtained grid connection conditions for our first hybrid project. That means the combination of photovoltaics, where we got 900 kilowatt peak and or 900 kilowatt to the grid, but that will also be 900 kilowatt of DC capacity, plus 230 kilowatt hours of battery storage. So this is a relatively small project, but this is a relatively new concept in Poland, and and of course we'll try to develop more such projects as well as battery only, but more on that later. And last but not least, in the third quarter, Regen, a company in Australia that we've invested in back in 2020 and 21, has and in which we hold a 7.6% equity stake, has managed to commission its first full-scale plant, combining its novel CSP generation technology and storage of energy in water. So this is a major milestone, which first of all we believe is very significant in driving the value of investment, but it also underscores and underpins the logic and value creation potential in our decision to develop projects based on the Regen technology in the Australian market. So in terms of generation results, as mentioned before, we've seen a year-on-year increase with most of our newly constructed power plants in Romania already being online. The last two remaining with 10.1 megawatts were commissioned at the end of August and early September. So had they been online, these numbers would have been even better. But as of Q4, we have all these new power plants contributing to the overall numbers. What has changed, and in quite a dramatic fashion, of course, compared to last year, energy prices. So particularly the third quarter last year saw the absolute peak of energy prices. So last year we managed to generate revenues of 413 euros per megawatt hour on average, and this year that same number is 161. So it's a very, very significant decrease year on year, where of course our increased volume could not compensate. Year to date, the same average number is 168 per megawatt hour. Most of our portfolio currently runs on a merchant basis. And however, we are currently, given the development of energy prices this year, as well as the outlook for next year, we are currently reviewing our options. So in the Czech Republic, at the end of November, we are faced with the decision whether to stay in the green bonus scheme, where we get the subsidy element paid by the mandated off-taker, but are free to sell electricity into the market, or we return back into the feed-in tariff regime, and which for 2024 would provide us with revenues of 650 euros per megawatt hour. So as things stand today, we are inclined to return to the feed-in tariff for 2024. Just as a reminder, this is a decision we can change once a year. So if conditions in the market change and energy prices go up significantly, we can return to the green bonus system, allowing us to sell electricity in the year 2025. So this is a decision we can make once a year. In Romania, the newly connected power plants are selling electricity on the basis of a market access agreement with Transelectrica, where we are paid for our production the equivalent of the 90-day trailing average price of baseload electricity in Romania. And this has multiple advantages. One of them is that we have a highly bankable off-taker. We are not impacted by the lower or negative prices that we've also seen during the summer, as we're getting the baseload price, that means the average price of the day. And the last but not least, on the basis of on the quality of our forecasting, we are also not charged for balancing. This year, so far, the lowest realized prices were in Australia and Hungary. In the case of Australia, we are selling electricity into the market. Plus, we are receiving large generation certificates, which we are again selling in the OTC market. So the revenues are composed of these two elements. And in the case of Hungary, where we exited from the support scheme, the card feed-in tariff for the vast majority of our portfolio in early 2022, we also have the option to return to the feed-in tariff if we choose to do so. However, this is a one-way street. So as opposed to the Czech Republic, where we can decide once a year to switch back and forth between the two systems, if we were to return to the feed-in tariff in in Hungary, we would have to stay in that scheme until the end of the support period. So if we were to return, just for comparison reasons, at the moment, the feed-in tariff for this year is the equivalent of 107 euros per megawatt hour. This feed-in tariff is adjusted annually. The formula for that is CPI minus 1%, based on the inflation rate in Hungary to date and some outlook for the rest of the year. That indexation for next year is expected to be in the range of 16 to 17%. So this is a decision that we're reviewing, whether it makes sense to return to the feed-in tariff system. This we can initiate at any point in time, but of course we also need to bear in mind that we would then be bound by the support scheme for the next more or less 15 years. In terms of the pipeline of our generation assets and then our development activities. So as mentioned before, we are essentially completed the construction of the 5 power plants with 20.1 megawatt peak in Romania, which we refer to as the second batch. After the first 8 power plants, there's another 5. And in one case, we're still waiting for grid connection works. And but on all of these power plants, we're currently going through the paperwork related to the grid connection process, which, as we have learned over the last year in Romania, is quite substantially more complicated than in Hungary, for example. But we are very confident that we'll be able to start generating revenues on 4 out of these 5 in the first quarter. And in the case of the 3.2 megawatt power plant in Szabolcs, we expect commissioning and revenue generation from the beginning of Q2 next year, which means that when the sunny season starts, we should have 140 and ultimately 143.5 megawatts of generation capacity available, which we also expect to lead to significant improvement in our electricity generation revenues as compared to this year. And the next batch of power plants, which is another 4 with 17.7 megawatt peak, is planned to commence in the second quarter of next year. And at this point in time, we have already started with the procurement of components that have a longer lead time. And in relation to the development pipeline, I'm handing over to Michael.
Yeah, thank you. So in our Australian pipeline, as we've reported previously, we're focusing our attention on the Regen projects, and we are building a bigger pipeline. This year, we've successfully signed another land agreement for a site in New South Wales. So that's increased our early stage development for an additional approximately 85 to 90 megawatts. And we are continuing to develop the Yadnari project, where we are in the stage of really finalising the grid connection and a few other additional elements of the studies that are being done for the submission of the development approval. In addition to that, we are working at the moment on 3 additional sites in New South Wales, where we're at the advanced stage of signing land agreements, and we're hoping to have those resolved in Q4 and move into 2024 with a very, very healthy pipeline of regen projects, which would be around that 650 megawatts of total capacity. So this is for that part, and I think that's probably it for this slide, but I'll give you a bit more insight into what we've been doing in Australia on the commercial industrial space as well.
Well, maybe I'll just wrap up on the key points in the CE region. So, as mentioned before, we have obtained the construction permit for our largest power plant, largest project in Romania. This is a very significant step for us. This is a project that we have developed essentially from scratch. So it's been a relatively long journey, and we believe that a lot of value has been created in this development effort. And just like in the case of our Polish projects, we are also reviewing our options whether to proceed with this project and build it for our own portfolio, or potentially exit it at the ready-to-build stage to redeploy that capital into other areas. In Poland, we have announced already a pivot in our approach. So we are in ongoing discussions in relation to the sale of our projects that have grid connection capacity, but even when we do that, we still have a relatively significant land bank of signed land use agreements that we are maintaining. And what we are doing there is, on one hand, we are reviewing whether, given the improvement of the grid infrastructure in Poland, we may want to try and reapply for grid connection capacity for PV, or as we've done already, for hybrid, but potentially also for energy storage. At the same time, we have identified and signed up over 40 plots of land where we are planning. In some cases we have already, but also planning to submit capacity applications for storage-only projects. And last but not least, that land bank that we have can also be exploited in different ways. So in one case, we are actually selling the land use agreement that we've signed up to another developer for a cash consideration of 120,000 euros. This is a transaction that may close either still this year or next year. And we are actually in discussions with developers who, in the same areas where we have our land plots, have capacity and are looking for permitted land. So there's more value beyond just the 35 megawatts that we are currently in the process of selling. So it is a longer term process, but there's clearly value in what we have already. And just because we're selling PV projects does not mean we stop developing projects in Poland, but simply for a different type of assets, and that is mainly battery storage. The new energy division, which is the result of the integration of Lerta at the beginning of this year, it has brought us two main new business lines, which is the capacity market and origination and trading. And the capacity market and the provision of DSR services to the Polish transmission system operator is also going to be a significant driver of our growth, and I would also argue recovery in 2024. So this year the contract revenues are 7.7 million. euros, and for next year, what has been contracted is in excess of 25 million euros. So a very significant increase. And what makes this revenue stream for us, particularly on a group-wide basis, very attractive, is the negatively correlated seasonality. So the prices for DSR services achieved in the auctions, the contract values are the highest in the first and the fourth quarter, while the lowest in the second and the third. So they're really inversely correlated with our revenues from energy generation, which, with the exception of our power plants in Australia, have the highest revenues in the second and the third quarter. So we expect also from the point of view of when the gross profits from the provision of the services is generated, that to be concentrated in the first and the fourth quarter. So as a result, we believe that we will be entering 2024 with a different dynamic and different financials than what we had previously. In terms of the strategic, so as you can see, between 22 and 24, there's extremely dynamic growth. We believe that the market potential for capacity market services and DSR in Poland will continue growing, and definitely we want to be part of that growth in the Polish market. At the same time, we also see mechanisms for the procurement of flexibility services, including demand-side response, to be developing in other countries across Europe. And we see that as a very important potential growth vector for us, as we can leverage that experience from the Polish market in these new markets. So we are currently reviewing markets in the region, but just to name one market that is now opening up and developing dynamically is Spain. So we're looking at that market, but also all the others that are opening up across Europe. So quick overview of our other business segments. So we've seen significant growth in our EPC activity, but as you can see from the chart, a significant part of the volume of EPC activity and value is the result of internal activity, so that we've been building our own power plants. But at the same time, you can also see on the side of external EPC revenues a very positive dynamic, mainly driven by the growth in Australia, but also an increase here in the CE region. And it's important to say that providing external EPC services, both for utility scale projects, but also behind the meter, is something we want to focus on very strongly in 2024. So we have a good order book in Australia, so far our strongest external EPC market, but we are also working very hard to win EPC business in the CE region. And we also position ourselves as a utility scale EPC with a particular focus on the Czech Republic and Romania. So this will definitely become a more significant contributor to our revenues and also profitability next year. The area that has underperformed quite dramatically this year is our technology trading. So while it was a very significant and strong contributor to our financial performance last year, in addition to the high electricity prices on our power plants, was technology trading. I think everybody who follows the solar industry must have picked up over the last couple of years the last couple of weeks and months, that there is a very significant oversupply in Europe of pretty much all components that go into a PV installation, from modules to inverters to batteries. It's a real glut. We've also seen a very significant decrease in the price of modules in particular, where over the last 12 months, the prices have dropped by 40% and more. So while a year ago we were procuring modules for 27-28 cents per watt peak, At the moment, the going market rate is 15 to 16 cents, in some cases even lower than that. So the good news is we have, with in relation to modules, we have not been hit strongly as our inventory level has been very low. However, we have seen a significant slowdown in the sale of batteries. As you can see, it's been very market. So we still have quite significant stock of batteries, which particularly in the third quarter, when the Czech residential installation market, to which we have been supplying most of that product, has come to a standstill, as there was a 2-month break in subsidies. That market is picking up, and we're also looking at ways how to increase the sales volumes to other markets in the CE region. So that is we're seeing an accelerating trend. We are also looking for applications for our battery stock in small and medium-sized C&I installations, and we see growing demand from commercial industrial customers to not only put solar on the roof, but to also use storage. So there is a strategy, but how to reduce our stock levels. But in terms of numbers, the contribution this year has been a small fraction of last year, and has been the second main contributing factor to our financial results. On the upside, our operations and maintenance business, which in the last couple of years has been growing rather marginally, has accelerated very significantly this year. So we have grown so far by 43% in terms of O&M assets under contract. We believe that, from what we can see, there will be further contract signings until the end of this year, and that growth trend, we are very confident will go well into 2024. And given the fact that across all markets in the CE region, and in particular in the Czech Republic and Romania, many gigawatts of new capacity will be added, we believe that we can grow very, very significantly in the next couple of quarters and years. In looking at the profitability of our O&M arms in the various countries, at the moment, we reached a very nice level of profitability in Hungary. In the Czech Republic, we have had a negative impact by the lower electricity prices, because some of our contracts are actually linked to electricity generation revenues. And in the case of Poland and Romania, we are marching towards the break-even point. So this year, we're still in a situation where we're investing. However, given the market growth, but also our success in winning new customers, we are confident that all 5 markets where we operate will be EBITDA positive next year. So next year, we expect definitely a more material contribution on the revenue side, but also a sizable contribution in terms of EBITDA to the group results. Speaking of group results, here is the income statement for the third quarter of this year in comparison to last year. So clearly there is, it is not a very positive picture. As mentioned before, the significant year-on-year decline in electricity generation revenues has led to a drop by 53%. And the volume was up, but prices were simply extremely low. I think looking at the price chart for next year, it is obvious that the third quarter of last year was an aberration on the upside. Looking forward at our increased installed capacity, but also the futures markets, we are very confident that across next year, our electricity generation revenues will recover. On the other revenues, the decline of 40% is primarily driven by the significant drop in revenues from components trading, which again, in the third quarter of last year was at its peak. So we really managed to sell very significant volumes of batteries at very attractive margins last year, and that in comparison has really dropped to a very small fraction of that volume. So the resulting drop in EBITDA is dramatic. Again, it is important to bear in mind that electricity generation revenues from our portfolio have the highest EBITDA margin of, in most cases, more than 90%. So any delta up or down flows through our P&L in almost on a one-to-one basis. So our EBITDA stayed just below 2 million euros at the EBIT level. We incurred a loss of 1 million at the bottom line of 2.1, which of course, compared to last year's numbers, represents a very dramatic decrease. However, in the second quarter, we also connected 2 power plants and recognized other comprehensive income. So that at the end of the day, our total comprehensive income, so the true bottom line from our point of view, has remained slightly positive at 335,000 euros. For the 9 months, the picture is slightly less dramatic, but still not positive. So our revenues are down by 10.3%. In electricity generation, that's based on a decline of over 40%. But we have seen a 12% increase in other revenues. And here it is important to point out that compared to last year, we of course have revenues from demand-side response services. We have electricity trading revenues, and we have seen increases in, as mentioned before, in EPC services and operations and maintenance. So our EBITDA year to date stands at 4.75 million euros. Again, an 80% reduction compared to last year. EBIT, we have swung to a loss of 2.5 million, and the net loss is 9.6 million euros. However, given the 31.5 megawatt peak we have connected this year, our total comprehensive income is minus 500,000 euros. Of course, these changes in the market environment, so mainly low electricity prices and lower volumes in our components trading business, have led us to on one hand to review our strategy and to refocus our activities, but at the same time we've also looked very closely at possibilities to reduce our costs. So on one, which has several elements. So we have looked at cost reduction measures in various areas of operating costs, but we have also at the end of the third quarter implemented a reduction in headcount, which is a combination of some layoffs, but also positions where we are not replacing attrition. So that reduction has been around 10% of our workforce. The goal was to economize, but at the same time not to jeopardize the delivery on the business goals that we have set ourselves for the rest of this year and particularly for 2024. Looking at our balance sheet, we have seen further growth in the third quarter, and which has continued from the beginning of the year. So since the beginning of the year, our balance sheet has grown by 12.7%, fixed assets by 90%, and our equity has remained more or less stable. So we are at it's very important at 72.5 million euros, which means that we are still comfortably above the covenants in our green bond, with an equity ratio of 28.4%. One positive set of news is looking at our cash flow statement. So while in the first and the second quarter of this year, we have recorded negative operating cash flow, that picture has turned around in the third quarter, where we achieved a positive operating cash flow of 5.5 million euros as a result of our effort to reduce working capital, and a significant part of that was a reduction in inventories. But we've also been very focused on reducing other elements of our working capital, and this effort is continuing. So clearly, maintaining positive operating cash flow is of great importance. In terms of investment cash flow, since the beginning of the year, we have essentially invested a similar volume as last year, 17.7 million since the beginning of the year. And in terms of financial cash flow, we have the net amount of new capital raised is 17 million, so more or less in par with our investment cash flow. So outlook, it should actually say outlook 2024. Sorry, no, 2023. Sorry. So based on the results that we have achieved in the first three quarters, the first two quarters, we updated our guidance, reducing the outlook from to 110 million euros of revenues and 10 million of EBITDA. Given where we stand after three quarters, and here the significant decline in components trading revenues has been mainly at fault. We currently see that our consolidated revenues are going to be in the range between 75 and 80 million. So we hope it's at the upper end of this range. In terms of our EBITDA guidance, the 10 million guidance that we provided in August, we see as still achievable, provided that we will be able to conclude the sales process of our Polish power plants before the end of the year. So this concludes the presentation, and we are available for questions, of which I can see quite a few have been submitted. So the first question is whether we can provide an outlook for next year. So we are at the moment not going to publish any guidance for next year. I think what we can elaborate on is that with the increased installed capacity that we already have now, and which we'll be adding in the first quarter, so at some point in April, we hope to be at March, April at 140 megawatts and ultimately 143.5. We will be producing again significantly higher volumes of electricity, and based on the current forward prices, we do believe that but based on these inputs, we should see a market recovery in our electricity generating revenues for next year. So we had 36 million euros in 2022, of course, based on I would say excessively high electricity prices. So when we look at put together all the inputs, we do believe that we should be able to get above the 30 million euro mark on our consolidated revenues from electricity generation. The second pillar next year will definitely be revenues from providing demand side response to the Polish TSO. So as mentioned before, 25 million. So these two areas together should get us well over 50 million in revenues. And we are currently in the budgeting season, so we will definitely get a better picture shortly. And I at this point we do not expect to provide any guidance until the end of this year. But once we get a clear picture, we will consider providing a guidance for next year. So the next question is whether we're planning any emissions. By that, I assume what is meant is an issuance of any kind of type of securities. That would be shares or bonds. So this, at the moment, this is not planned. The next question is when will there be a new CFO? This is so we cannot give a specific date, but we are clearly aware of the fact that my personal double role is meant as an interim measure and not a status quo. So we're definitely working towards as a resolution of the current situation. Whether that still happens this year or in 2024 is not. We cannot confirm at this point in time. So the next question is, what are the main reasons for reducing revenue outlook by half within 6 months? So what doesn't develop according to the original plan? So again, the most significant delta in revenues has been from our components trading business, where the situation literally worsened on a monthly basis. So clearly at the end of last year, things look very, very positive. When you look at the numbers of our components trading business in the first quarter and also the second quarter, they were still comparable to the volumes achieved a year before. But since May, June, and this is something that when you look at the reports of module manufacturers, inverter manufacturers, battery manufacturers, you can see a very significant decline. So the volumes of production and sales in many cases has dropped by more than 50%. A lot of material has been shipped from China to Europe, so there's a massive overhang. Pretty much all the distribution channels are full with product. So, I mean, over the last 15 years, we've seen several peak cycles in the solar industry. Very often they were related to one type of components, so there was either a shortage or an overhang of modules. Then at a different time it was inverters. But what we've seen this year is essentially a perfect storm, where across all types of components now, also including batteries, there's a significant overhang. So that the high demand from Europe last year has triggered the massive capacity expansion with the main manufacturers, most of them, of course, being in China. So they've all increased their capacities dramatically in anticipation of continuing strength of the European solar market. A lot of that has been shipped to Europe, and however, there's been a market slowdown across the continent, and that relates both to utility scale projects, but also residential and commercial industrial applications. So it is something that has hit everyone, also in the distribution business. I think that compared to others, as far as the intelligence, based on intelligence that we have gathered, other distributors in the markets where we operate have been hit a lot worse. So the significantly higher stock levels, many of them also high stock levels of modules, where we had this 40% drop. So we've clearly seen a significant reduction in revenues and profitability, but so far we have been able to avoid some really significant one-off losses on our inventory. So and I think we will see both among manufacturers of the various components, but also in the distribution business, a mass casualty event. And I mean, we've seen really quite a few module manufacturers go out of business, and there'll also be significant consolidation in the distribution business. And at this point in time, it's really difficult to anticipate, but I guess we'll have to wait another 2 or 3 quarters until the picture really clears and this consolidation has happened and the stocks have been worked off, and into what we expect to be rising demand for these components in 2024. The other element, and of course the one that has the most significant impact on our EBITDA, is the significant lower electricity prices, which have led to the reduction in our revenues. Next question is whether the potential change in the Polish government impacts our plannings, and if yes, how. So at this point in time, based on our understanding, well, first of all, that change of government is not 100% yet, however, very likely. So we have analyzed it across all our business lines, and so far we don't see that that should have a negative impact. Given that the new government may be less hawkish on price limits, we believe that actually some of the elements that have been rather negative for the Polish energy market may get removed. So I think that the chance that would be rather positive is higher than it would be negative. The next question is what to expect the interest rate on the 50 million financing be. So this is something that we cannot comment on, other than that it would be essentially in line with what we see with other financing alternatives in the market. But these discussions are confidential, and clearly if this financing gets concluded, the terms will be made available either at the time or then, of course, in our financial reporting. The next question is that in Q3 we only report 0.5 million euros of external revenues in our investment division. Question is whether we are selling the energy from our own portfolio via new energy. So the answer to this is yes. So in the Czech Republic and Hungary, all the electricity produced by power plants is sold through Lerta Energy into the day-ahead market. So the vast majority is sold that way. The next question is what the feed-in tariff in the Czech Republic for 2024 would be. So based on today's exchange rate, it's approximately 650 euros per megawatt hour. And this feed-in tariff is subject to a solar levy of 20%. So 20% of this 650 euros per megawatt hour are retained by the government as a solar levy. Just to compare, on the green bonus that we are achieving, that we're realizing this year, that levy is 21% of a lower number, but it's a slightly higher rate. Next question is whether we expect write-offs in the technology trading segment. Well, as things stand today, I mean, we have, as I mentioned before, we have had very little stock in or modules in our stock. But we are really talking very, very insignificant volumes. We have sold at lower prices, again compensated by positive margins and other elements. But on the rest of our inventory at this point in time, we believe that our landed cost is still attractive. And I think it's also important to explain that in this very turbulent time in the solar industry, what is happening now, and of course we are applying the same, is that manufacturers of modules, but also the other components, are actually providing the distributors with credit notes. So they are to some extent protecting them from these price drops. Of course, everything has its limits, but we have been also able to receive some credit notes, so basically ex post price reductions from the supplier of our batteries. In the case of inverters and mounting structures, the price changes have not been so dramatic. So on the main items, we have at the moment landed costs after additional discounts at the level which is below the prices at which we are able to sell. So the next question is that in the third quarter report, we reported that we bought back some of our green bonds. So yes, I can confirm, as disclosed, we bought back a nominal of 510,000 euros, which is about 0.6% of the outstanding volume. Of course, at the current discount to normal value, this is a value creating exercise. We are not, so at this point in time, we cannot confirm or deny. I mean, it's basically something that if there's freely available cash and we need to reduce our leverage, this is definitely, given current conditions, the most value-adding way of doing so. So in a worst case scenario, can we be sure you can still pay the interest on the green bonds? Well, I think that first of all, while we have definitely behind us three very difficult quarters, and a lot of things we were expecting to develop in a certain way at the beginning of this year, and they've gone differently. I would still definitely not call what we've done this year and achieved this year to be a worst case scenario. And particularly, as mentioned before, I think we have set the stage for what we hope to be a significant recovery next year. So it's a question of how you define a worst case scenario. But I think that we have a history now of in relation to our bond issuance of over 10 years of always meeting our financial obligations towards our bondholders, and that not planning to change that. So which segments are loss-making or have negative EBITDA and or operating cash flow, and how much? Here, I would really like to point you towards the segment reporting in our quarterly, both for the third quarter of this year, but also the comparison to last year. And we're happy to follow up in detail later. So there's a lot of information there, but we're happy to follow up to specific questions. But in general, clearly the largest contributor of EBITDA is energy generation, and we've seen the EPC business contribute this year. Next year we'll see positive contributions from more of our business lines. So the next question is other expenses, 4.9 million euro in Q3. So, well, in a nutshell, there's all other operating expenses that besides personnel costs. So this is a really wide range of starting with office costs. We have a significant fleet of cars. We have so there's a lot of travel happening. We have a small army of service technicians that are on the road every day to service our customers. But of course, we use a lot of technical, legal, financial, external services. So it's basically all other operating expenses besides personnel. So the next question is what EBITDA contribution we expect from the sale of the Polish PV plants. Well, we're in the process of offering and negotiating the sale of about 35 megawatts of projects with 35 megawatts of grid capacity. And these projects are of various size, starting with just below 1 megawatt. The largest single project is 20 megawatts. So we see demand and real interest from various parties, and prices are also correlated with the size of the project. Typically, the larger the project, the higher the value in the market. I would say that we are currently aiming to achieve on average somewhere between 180 to 200,000 euros per megawatt of project rights. So that gives you an indication. Of course, we're trying to, and we have multiple interested parties, so there is some competitive tension. And of course, the goal is to reach a level higher than that. The next question is related to that. So 35 times, let's say 200,000. So the goal is around 7 million euros. Some of it, well, at the moment, we're working on all of that to be realized still in the fourth quarter, but yeah, it's in process. Then the next question is whether we can comment on the reasons for the green bond price having declined to 53-54%. Well, it is we should not comment on the prices of securities we have issued, but I think when you look at the chart, the decline in the price of our bonds started around the time when we published our half-year results, and the reduction of our guidance. So clearly, it is a reflection of the change in our negative development of our financial results this year. And of course, we do realize that this is not a positive situation for our investors, and we are working very hard to improve our results. And as a result, we also expect the price to recover. So the next question is whether we can provide a broad range of EBITDA for next year. So unfortunately, at this point in time, we will not comment on the outlook for next year. I think we've tried to be specific on what we expect to be the main pillars of our revenues and also profitability next year. So electricity generation and DSR. Of course, there's a lot of other business lines. But as I said, at the moment, the market is in a very turbulent situation, and what we definitely want to avoid is a situation like this year, where we entered the market entered the year with a very positive view, only then to see some key pillars of our assumptions crumble away. So we believe that the market will stabilize, that it will become more readable, and as soon as we feel comfortable, we will come out, if possible, with a guidance. But definitely also the lesson learned from this year is that we will also be more specific on the assumptions behind our guidance. Basically, clearly showing which electricity prices we assumed, but also other key factors that have led us to a certain guidance that we will publish. The next question is whether we can provide an update on our PFAS business line and when we will be able to monetize. So
maybe I can add something to this one.
Okay.
Yeah. So the process of going through the pilot projects is gradually coming to the final stages. So we've completed a very important pilot project in Australia with the Australian Department of Defence, which has had very positive results. But we're still going through a review process of those results and providing a fuller picture of the science behind what's happening to the PFAS chemicals. At the same time, in parallel, we have a commercialization plan that we put in place, where we're continuing down a pathway of understanding the market potential, looking at markets where we would like to focus our attention. And on the back of that, we've participated already during this last year in several global conferences in different regions, mainly focusing on Europe, the USA, and Australia. So that commercialization plan will continue in 2024, and we already have some very good solid indications of interest from additional customers, mainly in the airport space or airport operations space in the Czech Republic and in Australia, and we will continue to push forward with potential pilot projects also in the US. So that's basically where we sit with the technology. Very good results, and we're hoping to again sort of get back on track from a perspective of our expectation of generating commercial revenues for the technology in 2024.
Thank you, Mike. So the question is when shareholders will pay back loans made to them. So here it's important to point out that while some of this volume are personal loans, the most significant part of that is related. It's actually has not been given to us personally, but to a vehicle that we used for certain in line with the restructuring of the group some years ago, and there's a payback plan which we will update until the end of this year, so it will be then also disclosed in the annual report. Next question is why investors should invest in Photon Energy and why now is a good time. Well, I think we are, while this year has been very difficult, very obviously, we do see a lot of potential for a significant turnaround next year. So what we have been doing a lot now is invest into our commercial activities and in making our brand better known in the markets. And what I have in mind here in particular is our key target group, which are B2B users of electricity. And I think we have strategically set ourselves up in such a way that we can offer customers bundles of services as they turn from passive use of electricity into what we refer to as flexumers. There's a lot of services and support they need. And after the integration of Lerta with energy trading licenses, with the virtual power plant software, we can help them in this path. And we have a very good track record with and we're getting very good traction with some of the multinational companies operating in this region. And the results of this will become visible quite soon. And what I can say, because we mentioned it already, we expect to sign our first behind-the-meter PPA in Hungary with a commercial customer. But what we're also seeing is that as scope 1, 2, and 3 requirements are going to feed through the value chain across multiple industries, we'll see also a lot of companies in the supply chains having to generate their own renewable energy and become more sophisticated energy users. So this is driving a lot of demand for which we're going to react, and we're preparing ourselves. So I think the major change that we are undergoing at the moment is that we are getting much more ready to engage with outside customers. So the last couple of years, a lot of focus has been on increasing our portfolio, but we definitely now, and this has been just fast-tracked and accelerated after the integration of Lerta, that we need to become a very customer-focused company, but we also, going forward, want to be a lot less and ideally completely independent of the performance of our generating assets. So these generating assets have been worthwhile investments. They have definitely been very beneficial, particularly in situations where we had difficulties in the market. Clearly, they've also been helpful also this year by still providing the group with cash flows, but we need to get independent from that. So we are basically becoming a company that is going to be much more focused on providing external customers with a whole range of services, and this will drive our profitability going forward. So this is why, in a slightly counter-cyclical sense, now could be a good time to look at us. Next question is why we wouldn't sell off our gold to buy back our bonds. So I think, well, at the end of the third quarter, we still had our gold position. Clearly, how that value element in our balance sheet could be used better has been reviewed since then. So again, I come back to one of the previous questions. Clearly, if there's excess liquidity available, repurchasing bonds at a discount is a value-adding step. So the next question is that according to the segment report, our business lines are positive, and a clear picture on the profitability of each of our segments. Well, there's a lot of clearly there's a lot of central activities that are to some extent allocated to those business lines. So what you see is that all the direct costs related to services provided by central services have been reflected, but clearly on top of that there are central costs which are not allocated. And again, as this is quite technical, I would invite a more detailed discussion offline. What you do see is that in the segment reporting is that our EPC, particularly in relation to internal activities, has had the second highest contribution of EBITDA after energy generation. But we're happy to go into more detail. The last question is how much So the next question is how much CapEx we expect in the fourth quarter of next year. I now take the liberty of assuming that this relates to the fourth quarter of this year, because fourth quarter of next year I really could not foresee at this point. So in relation to the fourth quarter this year, there is still some remaining CapEx related to the construction of those 20.1 megawatts that we have nearly completed, and I would have to get back to you with the exact numbers, but I would estimate it's somewhere between 4 and 5 million euros that have spilled into the fourth quarter. The next question is whether we have received interest from third parties to participate in a capital increase or other equity raise. Well, this is a topic on which we cannot provide any comment. The next question is that we have 16 million of loans that are current as per the end of the third quarter. How we plan on addressing that debt and which projects it relates to. So in our accounts, our current liabilities are composed of several elements. So one part is the current portion of our project financing. So the financing of our projects is of course long term, but everything that is repayable within the next 12 months is of course shown as current debt, which I would need to look it up, but I think a significant part of the 60 million is covered by that. We also have at the beginning of December our bond that we issued in the Czech Republic repayable. It's about 3.2 million euros, so that is also part of that. But there are also some other. Then we have an overdraft facility linked to our technology distribution business that also contributes to the 16 million, and that is a revolving facility. So these are the main elements of this 16 million number, and there may also be some other financings.
The last question.
Good. This is the last question. So, in case there are no further questions, I would like to thank you very much for your time and interest. And please, on some of those questions where we didn't, which have been more technical, please reach out to us. We're happy to discuss them in more detail. But of course, if you have any follow-on questions, reach out to our Investors Relations department, and we are happy to get back either in written form or in a phone call. So thank you very much for your attention.
Thank you, everyone.
And we hope to see you at the next call in February, and hopefully also with better news than today. Thank you very much.
Thank you.